discovered it early and you didn't take advantage of being able to mine it at that point. But so tell me about the transition that happened where all of a sudden you said, actually, Bitcoin's something that I'm going to take a look at and invest in.
Yeah, so I mean, the first phase was that really early on one where I got an idea of how the technology works. I thought the technology was great, and I was like, I have no idea how to value that, right? And especially because we're talking back then, it's a very tiny asset,
Yeah.
and so I was like, that's neat, but I'm not like a cypherpunk, and so I'll yeah, like good luck, guys. And then so I just kind of ignored it for a while. I had all this, I had health issues. I was doing financial support. I was working. I was kind of like you lose track of things. And eventually, when Bitcoin goes through those big bull runs, it captures media attention, draws people back in. And so, during the 2017 bull run, naturally, I had readers come out to me and say, "What do you think about Bitcoin? Should I invest in Bitcoin?" And I was like, "Okay, I clearly have to revisit this now. It's a much bigger asset." So I did a report on it. It was towards like November of that 2017 bull run, and I said, "Again, I like the technology. Looks really interesting. Here's a couple of different ways to value it." And my overall conclusion, I had kind of two concerns with it. One was obviously that it already had a massive price run up, so I was like, it's a very euphoric market. That concerns me. And then two, I was worried about dilution, right? So that was kind of the one of the worst moments for say Bitcoin dominance, right? So you had the rise of all these other tokens. You had Bitcoin Cash splitting out of Bitcoin, and I was like, so even though say Bitcoin's scarce, what if the market just distributes into all these tons of tokens? How can I say which one's going to do well over a given period of time? And so I said, at this current time, I'm going to go ahead and pass again. And that ended up being the right decision because you had a blow off top and then you had a crash and then you had a consolidation that lasted a few years. And so it underperformed many other asset classes from that point. But I kept watching the space. I mean, I didn't have like my opinion set in stone. And I saw some of those concerns answered. So obviously the crash and the consolidation took away the price euphoria. And then we started to see that the network effect of Bitcoin in particular strengthened, right? So Bitcoin Cash and these other hard forks kind of failed to capture any meaningful percentage of the market share, and we started to see stronger and stronger network effects arise around Bitcoin and then Ethereum as well. But basically, only those two kind of achieved a certain level of critical mass that the long tail of other tokens didn't get. I started to see, the groundwork being laid for institutional adoption, right? So we started to see places like Fidelity kind of roll out these custody solutions that larger pools of capital could get into. And so I was kind of watching it for a while, and then in early 2020, when we had the COVID crash, I was closely watching precious metals because I knew that there's going to be a lot of fiscal stimulus coming out of this, and of course during the heart of the crash, you had gold go down, you had silver go down even more. I mean, silver crashed, and so that was like a buying opportunity of a lifetime. But I also saw that Bitcoin and other cryptos were doing the same thing, and they were acting just like precious metals. And so on the upswing in April, I was like, okay, now I'm in Bitcoin, and so I recommended it to my research subscribers when it was like 7,000 in April 2020. And then it was like it wasn't say go all in on Bitcoin. It's hey, I'm going to start including Bitcoin in my portfolio. I think it's actually really well positioned here. I started reading more about it. I kind of learned more details of the algorithm, right? So I went into a greater technical depth than I did with my prior analysis. I started, just kind of researching it from a bunch of different angles, going into specifics of how Bitcoin's different than all these other tokens at a more complete level than I had before.
Mhm.
And so I kind of started building my overall investment thesis. And eventually, during that kind of mid 2020 period, I allocated to it pretty heavily because I was looking at, say, that the halving cycle it goes through.
Yeah.
So, and so I kind of just said, okay, the macro environment combined with, the network effects that build up, combined with the, it's long consolidation. And so I basically had a pretty high conviction view that it would do pretty well going into, say, 2021. And so I've been pretty much bullish ever since. During the mania earlier this year, when every cryptocurrency under the sun was going like vertical, I started to say, okay, I'm still structurally bullish here, but the whole space is getting frothy, and so basically make sure you have risk management in place. That obviously means different things to different people. It means it's not a good time to be leveraged to it, not a good time to be shocked if you see it go down. So this has been a larger correction than I was maybe expecting, but overall, it's been an environment that's done very, very well for that asset.
So, did discovering Bitcoin make you think differently about economics? Like, did you read Saifedean's book and maybe explore Keynesian versus Austrian economics more? And off of that, did you see Bitcoin as like a future currency, a future, store of value, a global reserve asset, or just something to expose yourself in your portfolio?
Well, so a lot of people kind of explore economics through Bitcoin, whereas, from my end, because I was already focused on macro pretty heavily, I already was familiar with all those different schools of economic thought.
Hmm.
And obviously, I don't go into some of the individual ones as deep as specialists do in those areas, right? So I can't say quote some of the people in the thinkers in that space the way that you say Safedine can, for example. But I was familiar with all the different schools of economics and how I use different pieces of them to kind of interpret data that's happening in the economy. And so it hasn't really changed my outlook too much because again, I partially came from a precious metals background from a young age, and so I already kind of had that, view that I was never ever since I was a kid, I was never super into fiat currency. I was like, we literally have these pieces of paper
Yeah.
that have no value, but people think they have value. And so ever since a young age, I was like, well, I want to store most of my assets not in paper. I want to store it in stocks. I want to store it in precious metals. I want to store it in real estate, whatever the case may be. And so this to me was like another asset that I could add to my arsenal to do that with, but one that I thought had, one of the better opportunities for long-term growth and capturing market share from other types of assets because it's a global distributed protocol that, even people in emerging markets that have a smartphone but they don't have access to stocks in the same way, well, they can still buy some Bitcoin. And we see overall that it's just in many ways a technology that adds a lot of value, right? So it's a permissionless, decentralized ledger. And so I said, okay, I think kind of combining the idea of gold with a tech stock, I think this can do very, very well. I'm not going to say buy so much that I'm worried about, say, 50% drawdowns. And I'm just going to buy an amount that I think is appropriate for my risk tolerance, which for me was pretty high because I did a lot of research on it. And I said, I'm just going to let this run for years and let that segment of the portfolio do whatever it wants because if I'm wrong about that thesis and Bitcoin goes down, the loss of that investment is not going to change my financial life. On the other hand, if I'm correct about that investment and that goes up by quite a bit, then that can add meaningfully, to my portfolio gains. And so far it's been a wild ride, but it is up notably from my cost basis, and we'll see how that continues to go. But for me, I watch more than just price action. I watch the fundamentals, right? So I look at what's happening on the Lightning Network, for example. I look what I've been following the miner migration out of China and the distribution there. So I started incorporating, I was looking into some of the finances of the public miners or the economics of buying your own miner, for example, and kind of going into all those different avenues. And so it's basically it's a subject that you know, there's only so much that can be said about gold.
Hmm.
And but whereas Bitcoin, it's like, you can always explore new avenues because it's always changing and growing and getting better over time.